A rally in Wall Street stocks faded on Friday, ending a 6-week rise in the S&P 500 index, still the main takeaway after week in which bond yields surged to the highest since July. Inflation worries resurfaced and U.S. presidential politics also simmered. None of it really bothered risk asset bulls, however. A 6-week rally in the S&P 500 that had been the longest since December came to an end. The index was backed down by banking stocks despite the surge in tech shares. A sell-off in Treasury sent us 10-year rates to the highest level since July on Wall Street. Another indication that months of almost record calm are coming to an end is the rise in DCS, and yet there was little evidence of panic. The Nasdaq 100 closed within 2% of its record peak, ahead of a historic week of tech results. A gauge of the Magnificent 7's mega caps notched its best back-to-back jump since February, and commodities also sold. Crypto shares sank after the Wall Street Journal reported that the U.S. is looking into Tether for potential anti-money laundering regulation breaches. Perhaps none of the legal actions taken by the U.S. officials against crypto funds in the last year pose a big of a danger right now, that is, to the digital asset market as a possible crackdown on Tether holdings. Tether is the issuer of UST, which is the token with the market valuation of over $12 billion. The coin is intended to serve as a digital alternative to the U.S. dollar. It is the most traded token on a daily basis and the third largest crypto in terms of market value. And while to talk more on this, what is outlook for global stocks in the coming week?
Yeah, the big event coming up is the November 5th U.S. presidential elections, which is very close to call. If you recall, in 2020, though Joe Biden won the popular vote, the actual difference came down to about 43,000 votes in the 7 sole swing states. So that's why it is so difficult to call. What is very clear is that it's a very polarized voting base, which is very sure of either side. The second is, though, there is a lot of rhetoric when actuality comes in, when reality comes in January, and then a new president is inaugurated. You see a much more toned-down policy regime coming in. So right now, Rorik will be at its highest. The third big point to note is that normally going into U.S. presidential elections, October sees a dip in the markets. This time we have seen very strong U.S. markets while emerging markets have been suffering. So it has reversed the historical precedent of the last 9 presidential elections. So now the surmise is that maybe there's a little sell-off post the U.S. election. Or, just because the corporate earnings are so strong, the U.S. economy is holding up so well, maybe this rally continues in the stock. So there is a bit of uncertainty, what your segment was also referring to, as higher volatility. The fourth thing we have to keep in mind is that huge inflows are coming into the U.S. equity funds, so people are not withdrawing. Money market funds, which are the risk overnight funds, are seeing for over the last 12 weeks, 10 weeks, they have seen inflows. Crypto, you would be quite amazed to know that it's getting nearly $1 billion a week in inflows. Gold and silver ETFs are getting a lot of inflows, but the standout fund inflow is coming in U.S. stocks, which is giving a lot of strength to the U.S. markets.
But can you also please elaborate on the correction in the Indian markets? Will we see a bounce back to a record high soon, or are we at a more fair valuation now?
We are at a fairer valuation. We've come down about 8 to 9% on the top-end index and nearly 10% on the broader market, so we are at a fairer valuation. The big reason has been outflows from foreign investors. Nearly $10 billion have gone out over the last 4.5 weeks, and year to date now we are down to only $2 billion of inflows. The strength is coming from domestic flows, where we have seen $51 billion are coming in from domestic investors. So fairer valuation from elevated levels. Markets are down 7 to 9% from all-time highs. Stocks which were very froey in some sectors like defense, railways, which were overvalued, are down anything from 20 to 50%. There is more pain left in the very micro cap kind of segments which were very froey. There is a lot of selling left there. When does the market come back? I think one, the US election event going out of the way will aid the markets, and second will be some amount of better earnings. So we have seen poor earnings for the September quarter, and that has also roiled the markets. What we are expecting is the second half of the year sees more government spending, and that also unleashes some private capital, and the operating leverage embedded in companies starts to work out. So I'm expecting another 2 to 3 weeks we should see the Indian markets turning around. There will be technical bounces in the meantime, but we have to hit some very strong support level before we really see a resilient bounce. But that's coming. It's not that the market structure has changed structurally. It remains a very strong bull market for the next couple of decades. Thanks for watching this video.